Steve here. You know, they say wars are fought with guns, but they're really won with money. So today, let's crack open the books on a really pivotal conflict for America, the Spanish-American War. And look, this wasn't just some military campaign. Nope, it was a masterclass in financial engineering, one that literally built an empire.
Just look at that number, 250 million bucks. That's it. That's all it costs to take down a European power and kickstart a global empire. Now think about it. Just a generation before, the Civil War cost billions. So yeah, this was an absolute bargain. But even a bargain has to be paid for, right? And paying for this one, well, that was going to require a whole new way of thinking about capital.
All right, so how did they pull it off? To get that, we've got to look at the books first. Let's ask the question, what did America's balance sheet even look like back in 1898?
See, you've got to get the context here. This wasn't some struggling country trying to scrape together funds. It's 1898. We're talking the absolute peak of the Gilded Age. The U.S. was the industrial engine of the whole world. And get this, the Treasury was actually sitting on a surplus. A surplus. The country had the money, plain and simple.
But that surplus actually created a really interesting problem for President William McKinley. Now, McKinley, he was a very shrewd operator. He had zero interest in dipping into the nation's gold reserves to fight what he famously called a splendid little war. No, sir. He wanted this war to pay for itself. So, how on earth do you do that?
So what was the big idea? Well, the answer came out of Congress, and it was really a pretty ingenious piece of financial engineering, one that was designed to reach into the pocket of just about every single American.
They called it the War Revenue Act of 1898. Now you have to remember, an income tax was completely off the table. The Supreme Court had just shot that down, called it unconstitutional. So they went for the next best thing, a consumption tax, a direct tax on the everyday life of the booming American middle class.
And just think about how this worked. You wanted to send a telegram? You paid the tax. Go grab a beer after a long shift? Tax. Smoke a cigar? Tax. Even getting a legal document notarized? Yep, you're paying for the war. You were essentially buying bullets for the Navy with your spare change. And man, did it work. This thing brought in millions of dollars a month, funding the entire mobilization effort.
And here's the really crazy part. It worked. And not only did it work, it was actually popular. I mean, think about that. A popular tax. Americans could feel it in their daily lives, for sure, but they didn't really seem to mind. It was all framed as a patriotic duty, you know? A small price to pay to buy your own little piece of the victory.
But that stamp tax? That was just one pillar of the whole strategy. The second part was, believe it or not, even more powerful, and it proved something absolutely fundamental about the new American economy. It was time to issue some bonds.
So the Treasury puts $200 million in 3% war bonds up for sale. Now back then, that was a huge amount of capital to try and raise directly from the public. The government figured, it'd probably take weeks, maybe even a few months to sell them all.
Man, were they wrong. They weren't just wrong, they were spectacularly wrong. The bond offering was oversubscribed 7 times over. More than $1.5 billion in bids just poured in. I mean, the American public was literally begging to lend money to the government. It was this unbelievable vote of confidence, not just in the war, but in the entire United States of America.
So where did all this cash come from? Well, that's the real story. It wasn't the old money bankers in London or Paris this time. Nope. It was regular folks, teachers, shopkeepers, factory workers. For the very first time, the U.S. government was financed not by foreign creditors, but by its own people. We had our own capital market, a deep one.
And that's what led to this realization. This moment proved, without a shadow of a doubt, that the American public was now the greatest lender of last resort on the planet. Our financial independence wasn't just some idea anymore. It was a hard, cold fact, proven right there on the open market for everyone to see.
Okay, let's bring it all home. Let's talk P&L on this whole venture. What was the empire's bottom line? And more importantly, why should you even care about it today? Because right now, today, Sunday, March 15th, 2026, the financial blueprint they drew up back in 1898 is still with us. It's basically the foundation for how a modern superpower finances its expansion and projects its power around the world.
Let's just break it down, line by line. Those territories we picked up, like Puerto Rico and Guam, they led directly to the global military footprint we have today. That domestic capital market we proved we had? Well, that was the moment Wall Street got married to American foreign policy, and they've been together ever since. And those so-called temporary consumption taxes? Yeah, they just evolved into the permanent excise taxes we all know and love today.
So what were the spoils of this very efficient little war? The United States didn't just end up with a surplus in the Treasury, it walked away with a global empire. It got Puerto Rico, it got Guam, it got the Philippines. In the blink of an eye, America went from being a continental power to a global one. It happened almost overnight.
So what's the final takeaway? What's the piece of market wisdom that holds up from 1898 all the way to today? It's this. Always watch the emergency taxes, the luxury taxes, the sin taxes. They always get introduced to solve a crisis, but they have a funny way of never, ever going away. This is Steve. I'll see you at the open.